Raymond, a good set of numbers there coming in from Raymond, and my colleague Mahima had a conversation with Amit Agarwal, the group CFO, just a short while ago.
Look, fundamentally, if I look at the engineering business, it comprises of three components. Number one is an aerospace component, second is auto components, and third is the engineering consumables. As we all know that aerospace components have got few customers, and one of the large aircraft manufacturer, I don't have to name, everyone knows, that was going through its own challenges in terms of labor issues. And therefore, what happens is they were not able, or their tier suppliers were not able to take the supplies from us during the last quarter. And that obviously for us is a very high margin business. Now, because of that reason, if your volumes are low, sales are low, then your ability to get the margin on that business is low. Secondly, we have also seen that in the third quarter, that the auto component business, especially in Europe, most of the auto companies have taken an extended shutdown or have reduced their deliveries from their plants. So that also impacted. However, the fourth quarter seems to be very, very different, where we are seeing a little uptick on the auto component side, that people are resuming back in Europe and continuing to demand for the products, as well as in the aerospace, as we all know that that aircraft manufacturer has resolved its labor issue and is coming back to life in terms of production, and the whole supply chain is gearing back. So to that extent, we are seeing an improvement in the fourth quarter and going forward. So we expect that margins to recover back, and we do not see that pressure which we had seen in the third quarter. It is a temporary pressure because of these two extraneous reasons which we had to take up. And it's a B2B business, so you can't change from today to tomorrow the customers.
Right. So in terms of the outlook for engineering business, that is, in the 3 to 4 years, you expect 2 to 3,000 crores of revenue and EBITDA of 500 crores. Does that change, or does that still hold true for you?
It still holds very, very strong. We are on a journey which is not having any aberration because of impact of 1 or 2 quarters. As you know very well, that the whole progress is very well planned. We have invested capex, even to your news, that on 27th of January, we launched, or we completed the installation of another 1 million ring gear capacity at our Sinnar facility, which was received very well by our auto customers. And I think slowly it is just a small shift of production for the third quarter by the European guys, right. And slowly it will come back. And India, we continue to believe, is going to do very, very well, which is, right. Again, we enjoy a great market share in the Indian domestic market.
Got it, Ms. Agarwal. In terms of the real estate margins, we saw an uptick this quarter. But 9 months, if we see, there's a slight downtick in the real estate margins. I want to understand as to, when do we expect a bounce back there, and what will be the levers?
So as you rightly said yourself, that you've seen the bounce back in this quarter with hitting a 23.8%. And if you look at it, when you launch a project, and as I mentioned last time also, or I think 2 calls before, that in the month of February 24, we launched our Bandra project. And when you launch, and this is the first project of Raymond Realty launched outside of Thane. So you have to do a little bit extra marketing, extra effort in terms of telling the world that this is a project of Raymond Realty, which has seen such a great success in Thane, is coming into a newer location outside of Thane, which is in Bandra. And I think that all expenditure, extra expenditure we have to incur, based of maybe called advertisement, putting the brand together, because we are a brand builder. We are not just a common developer or a real estate player. So therefore, it requires, when we do things, we have to do things in a Raymond way, which makes us a long-term sustainable player. So therefore, we are not looking just a 1 quarter impact. As I mentioned, for the engineering business, we are looking to create an impact over a long-term cycle. And as the quarters come by, you have seen yourself that in this quarter, we have seen a margin of 23.8%.
Right. Right. Go ahead.
So like we have told you earlier, that we will continue to maintain our margin profile in that range of 20 to 25% in the real estate business. I think we are well on track for that.
Got it. In terms of the new launch, the new tower in the Address by GS 2.0, I just wanted to understand as to what's the pre-sales been like, because now you would have started receiving bookings there, and what's the ticket size like for this particular tower?
So again, it is one more tower of Address by GS 2.0, which is actually, I feel, call is a hit product or a hit configuration for the group. I think we have launched more than 5 towers, 4 towers, and this is the fifth one. So therefore, we are seeing a very, very good traction into this, and we have sold almost 30% of the inventory. So therefore, the whole Address by GS philosophy of tower launching is that when you are finishing the inventory to the tune of 80-85% of your launched product, then you launch a new tower and then you start getting the booking. And I think if we look at it, the Address by GS2 first tower, we are about to give the delivery, which is in any case 2.5 years ahead of the RERA timeline. So therefore, there is a lot of conviction coming into the people that this company did not deliver only one first phase of the project of 10x reality earlier. It is also the second project getting delivered. So it is the theme of Raymond Reality to deliver its project ahead of the timeline. And I think that builds a lot of confidence, and therefore you get the bookings.